Thank you, Carolyn, for the great intro. Very excited to be here today. We are kicking things off with an exciting panel with leaders building innovative solutions to carbon credits, eco credits, renewable energy credits, and an exchange on which we can trade all of these environmental assets. So I'll go ahead and introduce myself and let the panelists introduce themselves as well. So hi, everybody. I'm Nirvaan Ranganathan, Director of Tokenization at Flowcarbon. I come from more of a TradFi background. I spent several years working in capital markets technology at Jefferies. I then transitioned into the space through the Celo blockchain community, specifically was leading the Climate Collective in collaborative building an ecosystem of climate applications on Celo. And I've now transitioned into this role at Flowcarbon, which leads us to the present day, where I work with Phil and the blockchain team on a number of Web3 products. Looking forward to a great discussion with all of you. Go ahead.
Hi, everyone. My name is Nathalie Capati. I'm the CEO and co-founder of Jasmine Energy. Not a traditional refi background, but I actually come from energy. I've spent 10 years building and designing battery packs for energy stationary storage systems. What I found that financing was the biggest barrier to adopting clean technology. I started Jasmine Energy 2 years ago. I'm joined actually by Kai. I don't ever see him often. He's one of our software developers building a smart contract. So Kai is also a member of Jasmine Energy. But we are here tokenizing renewable energy credits to help make energy markets open and accessible. Thank you.
Hi, everyone. My name's Luke Schubert. I am the head of product at Open Forest Protocol. At Open Forest Protocol, we're building the infrastructure for supplying on-chain carbon credits and other types of environmental assets. We've been building for 3 years, and we just this year issued our very first carbon credits for an reforestation project. So we're very excited for the growth that we're currently experiencing. But I came into this space. I was initially hired on to design some of the initial smart contract infrastructure surrounding our tokenization of environmental-based assets. And since then have kind of come on to the discovery and delivery of the 8 separate products that we built that are all integrated into a suite to provide that service. So really excited to talk and have this conversation and share a little bit about this space and where we're going.
Hi, everyone. I'm Farouq. I'm the co-founder and CEO of Neutral. We're an exchange for environmental assets, particularly tokenized environmental assets. And those kind of fit in 2 categories. Those are renewable energy credits and carbon. And we work with Jasmine Energy, Flowcarbon, OFP, and Regen network on creating a regulated trading platform for their assets. Thanks.
Right on. Hey, everyone. I'm Dave Fortson. I'm the Chief Growth Officer at Regen Network Development. We are a software company for the origination of ecological assets. I'm also a board member at BXC, Blockchain Times Climate, and the founder of Loa Labs, just to cover all the hats that I've worn over the past year. Thanks, everyone.
Great. Thank you all. So start things off. So high level, what we'd like to cover is why tokenization, how it's well suited to markets, then more about the markets themselves, as the title of the panel suggests. And then what we're looking forward to in the future, both what we see as what we need to build, as well as more broadly in the space, what we think, what we're looking forward to. So first question is, why are tokens particularly well suited for markets, for environmental markets? How does tokenization increase traceability across the life cycle of ecological assets? Luke, maybe we can start with you.
Yeah, I'd love to. Well, I think it kind of starts, as with most things in this space, with Bitcoin. Bitcoin showed us that you can tokenize money and make it a very efficient means of storing certain information and issuing those types of assets. And so we're kind of along the timeline after that and the adoption, and we're starting to see the tokenization of different types of assets. Tokenization essentially means that you take certain types of information about something and you encode it on a blockchain, a distributed ledger of information. So within the context of environmental assets, we're seeing in the voluntary carbon market and lots of the renewable energy credit markets, and as well as biodiversity credits, there are certain key barriers that are limiting the adoption of these types of assets, and those primarily surround transparency of the underlying data of those things that are issued. And so if you have a tool that can allow you to very transparently display that underlying data in a way that you can point out and say, this is where this asset was created, or this is what led to that creation, then you can really have a much more robust and trustworthy marketplace there.
Right. Oh, sorry, go ahead.
Yeah, I mean, one thing I would add to that is that like the necessity for trust is certainly there during issuance. That's something that OFP works a lot on, but it sort of permeates the entire value chain of most environmental asset markets. And that value chain starts with issuance, but then moves into trade and crucially retirement. So to make this less abstract, what we can think of is what can these systems enable, and that is the ability to trace someone's retirement claim to the instrument that it was purchased from, down to the data that was used to issue that environmental asset in the first place. And I think that kind of traceability from the retirement claims that entities are making all the way down to issuance and everything in between is what is needed to create integrity in these markets, and that's what this technology enables. So I think that's what really excites me about tokenization and moving this data and these assets on-chain.
Right, and I'll just add a quick piece there. I think, as you see, you've covered the retirement, market, and issuance. And I think the transparency of tokenization certainly helps in the upstream, like when you're initially providing project financing and debt capital to certain projects. Again, being able to have that asset level visibility, which might be halfway across the world, it might be in our backyard in Denver. But yes, as Farouq said, really all of the levels of the value chain here. Dave was thinking maybe we could cover about Regen's methodology governance and how that increases the transparency into the ecological assets that are on the Regen registry.
Sure. So I think, for a lot of folks, and this is, I think, one of the reasons many of us are attracted to blockchain generally, and it is, governance arguably is our one of our most important and probably underappreciated tools that we have available, and probably least understood. People, I think, get unhappy about some of the ecological asset markets. They're not quite sure. There's opacity. There's centralized power and kind of kingmakers and queenmakers, I guess, behind the scenes. Governance and on-chain governance offers us the ability to put out in front of everybody how money is being distributed, how methodologies are being developed, who has power, right? At the end of the day, you should really ask in any transaction where the power lies. And Web3 generally, I think, is while it may be the tooling and the understanding of learning from our existing governance flaws is not super advanced quite yet. The possibility of being able to, for example, like in Regen's case, be able to work with an indigenous community for the origination of ecological assets that are material to their lives, and not trust that somebody like me, frankly, a Westerner in the global north, understands what's best for that credit class, or for iterating and developing and upgrading a methodology, if I'm not landed in the community that is directly impacted by that. So Regen Network has really leaned into this aspect of creating on-chain governance tools that are very in our early days here, identifying who can govern credit classes. It's also in some ways, depending on how you look at the spectrum, we've just enabled permissionless credit class creation, allowing any community to develop their own credit classes and govern those standards or govern that class, which again opens up a Pandora's box, but maybe the Pandora's box that we need for rapid proliferation and still being able to land transparently who has power and what are the assets, the characteristics and attributes of those assets underneath those assets. So anyhow, I'll stop there and pick if you have questions.
Thank you. Yes.
Yeah, well, one thing I would add on that front is I think generally in Web3 there has been a lot of experimentation on governance and with DAOs, and I think there's been spectacular failures and successes on that front. And taking the models that have worked in other contexts, in other Web3 contexts, and applying them to environmental asset markets and asset origination, I think makes a lot of sense. Because there's a lot of work that's been done on that front, again, in other contexts that we can adopt to improve the origination of these assets. I think Regen's doing a lot of work on that front. That's really exciting.
Super. Yes, and just so going down the value chain, as Dave said, starts with governance over methodology, and methodology meaning what specific activities and safeguards are required to issue the carbon credit or the ecological credit. So you have methodology, then project financing, then actual credit issuance from the registry, then tokenization of those credits, moving into a market, and then finally retirement. So there's many different stages here. And I believe we're trying to illustrate how tokenization essentially connects this entire value chain. So now going more to the market side, question is, how do buyers, sellers, and intermediaries interact with tokenized environmental assets? Nathalie, maybe you want to kick it off.
Yeah, so if you're all familiar with carbon offsets, renewable energy credits, which is what we're working with, I'll give you a differentiator about that really quickly. So if you're thinking energy, that is a scope 2 emission, that's energy that you use, that's not a carbon offset. Carbon offset is anything that you directly emit if you're a cement manufacturer. Direct tailpipe emissions, that's carbon offsets. So what we do for renewable energy credits has a different type of market. There's 3 different archetypes, as you mentioned: buyers, sellers, and intermediaries. We call them financial institutions or traders. Buyers are simply your off-takers who want transparency. What we offer into the market is that these tokenized assets actually have the underlying data, the generation, the vintage, the location. We're able to give that data up front so that buyers can actually feel trusted with the asset. Let's see, solar farms, wind farms, renewable energy generators, any of those projects are actually generating RECs. So if you have a solar farm, if you even have a PPA, which is a power purchase agreement, you might have the ability to own the renewable energy credits. And what we do and what we facilitate is bridging those assets from the registries, from your electrical grids into this tokenized assets, which we're calling Jasmine liquidity tokens or Jasmine depending on what is an energy attribute token or Jasmine liquidity token. If you deposit into the pool, we can get into that later. But what we've done is actually create these very unique, special, digital twins, special snowflakes of these NFT projects and deposit it into a general asset pool so we can create more volume and more liquidity into this space. So that's helpful to get price discovery, to actually be able to price out a lot of these financial instruments so that we can fund more renewable energy. And then lastly, traders. Arbitrage is always a great opportunity for traders on and off chain. But the expediency that blockchain offers, if we're able to transact and settle very quickly, that's already a leg up over a voice brokered market that transacts OTC. So that's how we interact with all of those customers.
Right. And Farouq, I know you have something to say.
One thing I would add to what Nathalie is saying, so we work with Jasmine, we list their tokens on our exchange. Something that really excites me about having a tokenized asset that's available on chain but also on a regulated exchange is that you have 2 different kinds of customers, which are retail for on chain and then institutional clients on a regulated exchange interacting with the same asset and the same liquidity. And that kind of sort of convergence of interactions you don't see in most other markets. So if you look at traditional markets, you get a separation between those 2 sort of user or client segments, whereas here you see their convergence, and I think that's really exciting, and especially exciting for an emerging market where we don't have that much liquidity to share, anyways. So I think that's certainly a benefit that I see with tokenization and with trading on chain.
Excellent. And I'll just say +1 to the on-off-chain arbitrage. I think in the coming years, that is certainly going to be quite a high-traffic activity. Great. So maybe moving on to a similar question, but yes. So for someone not in this room, why does all of this matter? Maybe Luke or Dave, Either of you want to?
Yeah, I'd love to. It's an important question. We want to make sure that what happens here has applicability and utility in the world beyond, because we're all working very, very hard on things that we hope have an impact. But I think, correct me if I'm wrong, but the way that I view our work here is almost as if we are digitizing our relationship to nature. We are enabling and utilizing this great technology that we have right now to help provide the benefits towards financing and starting and accomplishing certain types of climate solutions, whether those be nature-based, technology-enabled, or renewable energy-based. And that's a really, really powerful tool set to be able to bring into this space and to be able to build off of. But I mean, on top of that too, I mean, just talking personally, we've been able to demonstrate product market fit for on-chain issuance of carbon credits. We've been able to build a business model off of this, and we're able to scale this, and we're growing this, and we're moving into spaces beyond even carbon. And so I think that kind of accessibility to the general world and opening up those opportunities to other people to build in this space and to come into here and to actually do something to fight climate change is a really powerful thing to be able to offer and to be able to build the foundational infrastructure for.
Maybe picking up on that, I was reading this morning a report around the amount of money spent annually around biodiversity conservation. It's somewhere in the range of like $125 billion. Scientists estimate the need is like $925 billion. So if we're not figuring out new tools to move capital off the sideline with trust and with speed and with deep verified impact, then we're not doing the right thing right now. I mean, for me, or at least for us, like it's really, in a lot of ways, there's the kind of one fear side of like, we don't want to get Guardianed, right? Any buyers basically doesn't want to show up on the Guardian front page as being, a sucker or participant into exploitation of the global south and their lands and not getting or seeing delivery of carbon credits. But on the other side, we've got to take moonshots or earth shots and get a little bit more rapid innovation and that tokenization, I think Web3, and frankly, dislodging in the best way possible or disrupting some of the legacy ways that we are securing finance, ecological finance, and bringing in some of these disruptions that allow us to bring more confidence to the dry powder on the sidelines and get that deployed as soon as possible. So to me, that why does this matter? It's not that Web3 is going to replace everything. It's not that our technology is cooler than someone else's. To me, it's just like, does it facilitate speed of capital moving off to the sideline to projects that work?
Yeah, well, one thing I would add to that is that the reason it should matter is because we just build a better market than is available off-chain. I think tokenization by itself doesn't mean much unless the outcomes and the interactions that you create in the market are better than what's available off-chain. So in the context of trading instruments and just general trade, which is an area I think a lot about, off-chain, we've seen a lot of attempts to create markets and liquid trading instruments to increase efficiency in both carbon and renewable energy credits. And most of those attempts have failed. So most trading now is still done via OTC channels because no one wants to use the available contracts that are available on like traditional off-chain exchanges. And my interpretation of that is that they've sort of reasoned by analogy and adopted market infrastructure from commodity markets and applied it to a market in which it doesn't make sense. So I think we have a really big opportunity here to create a new market and a better market than what's available off-chain, and really showcase the kind of financial innovation that we are all working on. And that's something that I think, or that's the reason it should matter, is just because we've built a better market. And that's resulted in better outcomes.
Totally. And would you say that, like, kind of, because the way I look at it is like we're not just building a better market that's more efficient and you can transact because of the technology that underlies it, but it's also the infrastructure and like the actual assets that we are offering are fundamentally different. If you can, on OFP, you can literally, we're trying to build like the 401k of carbon, right? Where anybody can access this, where you can look at pictures of trees that led to carbon credit generation. Like that's the granularity of data that we're able to include here. And that's kind of what these marketplaces are now offering, where you are really able to have much more certainty in the underlying data of the assets that you're buying.
Yeah.
I have one more thing, just getting back to the grassroots of what this is it's an incentive token. Like we've all here because we've been incentivized in a way, if it's a social claim, a financial claim. But what we've done is created these public ledgers, public databases, and turned it into an incentive structure so that we can invite more liquidity, more participation into these markets, which makes it more efficient. It's a network effect that I think is unavailable in the OTC voice brokerage markets. So, yeah.
All great points, and I'll just add here, well, we hear this a lot. Web3 is a mass coordination tool. Climate change is a mass coordination problem. I think just intrinsic to blockchain is the immutability and transparency it affords. So ultimately, we want it to become more like plumbing, where the user doesn't necessarily need to know or care that they're interacting with blockchain, just be able to trust the underlying infrastructure, that it's not going to change or be tampered with. Luke, hope you're okay with me saying this, but then it eventually gets towards a place where everyone here could have like a Pokemon Go for carbon verification, where we'd verifiably be able to actually contribute to the underlying data that then makes its way all the way to the markets that we've been discussing, and then eventually to a retirement claim itself.
Citizen science is great. I got iNaturalist, snap a pic of those plants. It's good.
Yes. Super. Great. So on the flip side, what do you see as the main rate limiting factors for scaling this market and scaling the broader tokenized environmental asset space? We have a couple angles here. Luke, you're the founder of the Carbon Token Standard Working Group, if you wanted to kick things off, but I know each of us probably have thoughts here.
Yeah. Well, the background on that, basically, I was on a Twitter space with Phil and a few other people, I think Adrian from Senkin. I don't know if you guys were on this, but it was back in early 2022, and it was talking about tokenized carbon. And one of the things, the big takeaways from that was the difference and mismatch in standards that lead to tokens. Basically, whenever we talk about tokens, if you're not familiar with the technology, to Nirvaan's point, we're trying to abstract that away. So hopefully you don't need to learn these things, as some of us unfortunately have. But basically, it's just an underlying rule set that manages a data structure. And so you have certain fields of data that consist of a cryptocurrency asset or a cryptographically secured asset that's then stored on a blockchain. That's all that a token is it's just bundles of data that's stored on a blockchain somewhere. And so the rules and the types of data that underlies that token can be different. So that has really interesting implications for downstream marketplaces and other types of exchanges where you have that mismatch there. So for the standard working group, we, I think quite quiosically kind of tried to unify those standards and create a unifying standard. And this perhaps was us attempting to answer the wrong question and rather trying to enforce a top-down approach. And so we've since transitioned towards appreciating and including a plurality of different types of standards. But I think that's one aspect to it. I think another big limiting factor as well is on the project development side of things, which I'm sure Dave could probably speak to a lot as well. But what we see on our side is, we work with a lot of projects that are led by these incredible humans that live on the edge, the frontier of the jungle in many places in the global south. And they have devoted their lives to planting trees and to restoring ecosystems and to really kind of protecting these local biodiverse regions. And so these people know what they're doing. They know how to plant trees. They know how to manage forests. And so they're great. They're great to develop projects with. But some people need financing. They need that kind of help. And that's one of those things that we've really been building a launchpad for, is accelerating the time to market in developing a project and then issuing credits to finance that project. There's always, forward financing agreements that you can incorporate there. But yeah, I think that's also a big limiting factor, is that time to market for these projects that are operating on the timescale of decades, potentially, hopefully, centuries. But yeah, I'd love to hear your thoughts on that. Anybody?
I can jump in. Agreed on the pre-finance. This tribe that we're working with in Ecuador, we're actually launching a pre-finance product for them in a couple of days to help underwrite their instantiation of a full-blown credit. So taking our best stab at that. I think pre-finance especially for, let's call it the masses, the less, not everyone's wildlife works, which is doing $150 million or $50 million a year. In Red Plus credits, can underwrite these kinds of things. There's a lot of other much smaller project developers that need support and the tools to do that. The only two other things I'd add that are a little on the other side of the spectrum, our tools are amazing and the UX sucks. And so until we put more time on comms and UX, and that is going to be a limiting factor. We can't be so in love with our tools for the 10 of our friends. They've really got to be, we've got to have the Amazon one-click experience when possible. And then we've got optical issues and regulatory issues that are just facing Web3 generally. Domestically here in the United States, is creating all kinds of pain points for those of us who are working in this space, and just non-normalized regulatory frameworks even around some of these asset classes like biodiversity credits. There's just it's a super choppy waters at the moment, and I think we're going to see things start to kind of hew toward some standardization and some normalization even around just Web3 tooling and securities and assets, but I think we're still got a little time still.
Yeah, and if I can just ask you to put your BXC hat on for a moment about interoperability.
Yeah, the one thing that just a little bit of alpha where BXC came together. My colleague Chris, I don't know if you're out there, Chris, worked his ass off helping us put this together. Is trying to get the Web3 house in order around interoperability and standards. That's something we're still pushing on, and we actually, I think in April, we'll be announcing a major, or for us, a major partnership with a significant TradFi institution around being able to move, a ton of carbon into TradFi, credit card-like space, and just all of the issues that immediately presents around Web3 standards and being able to interoperate amongst different folks who are minting natural capital assets, let alone being able to enter into traditional finance, where a ton of carbon is a ton of carbon. So anyhow, there's a bunch of efforts there. I will get my lashings from your experience, I'm sure, but it is an exciting time, and I appreciate the effort of all of us, who may be competitors in some ways, but understand we're at the end of the day deep collaborators because we have to be at this time in this space. So kudos to really everyone who's been participating on that front.
Seconded. We're all experiments, right? We're all trying to figure out the best way forward, and collaboration is the best way for that.
I have one more thing. Yeah, it was, I think I might have been talking about it with maybe Mark and Alan, Nova, Filecoin, shout out. But it was a missionality, but the idea that we need to figure out how these claims are going to be made. Once you retire the asset, once you retire carbon, once you retire a REC, what is the exact claim you are making? Is it an avoidance claim? Is it a removal claim? So if we can get some consensus around what that claim is when you retire, I think that would actually kind of help clear up a lot of the confusion on what this is actually doing and what we're actually selling. So some corral, some standardization around the claims.
Yes, and that will be a panel coming up later this afternoon. Certainly keep an eye out for Mark and Ellen. And the data standardization, which is a huge part of what we're working on here. Farouq, just wanted to check, just given Neutral's focus on compliance and really abstracting away some of the tokeny, blockchainy stuff from off-chain traders. I was wondering maybe if you can think of that as like how that's is removing one of the rate limiting factors we have.
Yeah, sure. So, in this context, I think of sort of two challenges that we face in the market. One is inherent to Web3, and the other is specific to environmental assets. The first one is a UX challenge of how do you get people used to Web3 rails, and then the second one is more of a market structure challenge of how do you transition a historically OTC market to a liquid one. And the way we think about this is that it makes sense to battle two things, not simultaneously, but one at a time. So a lot of what we do and what we work on is abstracting the user experience for institutional clients so that they can interact with these tokenized environmental assets without having to deal with Web3 infrastructure that they don't know how to work with. And then over time, get them used to those rails so that they can do native interactions, or that they even start interacting with liquid markets, which they don't even know how to do so far. So a lot of what I think about is how do we meet the market where it is now and then take it where we want to take it, or where other advanced markets are. And I think that takes a lot of patience and like a lack of imposition. So we can't say these are the tools, this is the market, come use it. But we really have to hold their hands and take them to where an advanced market should be. And I think that's a general Web3 challenge, but I mean, we have an additional challenge in environmental markets in that we're dealing with a low liquidity, like OTC, nascent market. So there's that additional challenge. And dealing with them like at the same time, I don't think makes too much sense. Yeah.
It's certainly difficult, but we're definitely making headway, which I think leads us to the optimistic part of the discussion of what we're looking forward to in the next, call it, year or two. Maybe I can kick off and we can just go one by one. For me, it's I think a lot of people here would have seen the acronym RWA, Real World Assets, that is very much picking up steam throughout a lot of different blockchain ecosystems. There are kind of two halves of this. There's the permissioned real-world assets, which are more like US Treasury bonds and things like that. And then more permissionless real-world assets, which is what we've been focusing on: carbon credits, renewable energy credits, eco credits, and other commodities. So I am very much looking forward to the growth of secondary markets and secondary liquidity for both those asset classes, and how that really provides a more tangible benefit for off-chain actors to have more utility with the same investments on chain.
Shameless plug, I would love everyone to embed Jasmine liquidity tokens into your protocol. We would love to have all of the projects and apps actually be powered by clean energy. We are consuming a lot of energy as a network, so we would love that. Second, more realistically, is we're moving from a collectible sort of NFT world to a commodity, a very serious and industrial and enterprise-friendly industry. So I'd love to see more tools that help kind of disguise that layer of blockchain. Maybe plug into SAP, if you know, you know. But that would be really wonderful for us to really get that wide-scale adoption from a lot of these large players who can provide the liquidity and the volumes that we need to make this market move.
That's awesome. Yeah, I think on my end, three things. One, we just issued Carbon. It was a 3-year process to do so. So excited to keep moving in that direction and increasing the volume there. We have built essentially the foundation of our platform. So now's the fun part. We get to integrate new tools and toys, new methodologies and verticals, as we call them. So different types of credit and environmental asset issuance will soon be coming to our platform. So really excited for that and building that out and incorporating all the wonderful DMRV tools that we're seeing in the world right now that are popping up. And then third, down the line later this year, also looking forward to potentially exposing more of the retail market to the refi through exposure to Open Forest Protocol. So more details later.
Yeah, I think, so I mean, we were founded in June of 22, and it was after you really saw the large, we've all got trauma. Yeah. Trauma. So it was after you saw the initial wave of tokenized environmental assets. At the time was Carbon with BCT, NCT, and there was a lot of momentum, action in the space. And we were founded after that period, the approach being that we were filling the gap in the market to allow for institutional clients to interact with these emerging assets. And I mean, as we all know, there was sort of a ban on tokenization for a certain period, and that resulted in a pretty dark, I would say, year in the past year where not much was happening. I think you saw a lot of building in the background, but nothing really happening in the market itself. And I'm starting to see now sort of the resurgence of movement and activity in the open market. I mean, you have Jasmine issuing assets. We launched 2 weeks ago with Jasmine. We're increasing the scope of the assets that we list, and I know a lot of partners have planned to launch assets. So I think in the next year, there's going to be a lot happening in the space, and I'm really excited about that. I think the worst of the past year and a half is behind us, and I think there's a lot of exciting things to look forward to.
I think on that line, we just got through or getting through a bear market in crypto, and then pile on top of that a bear market in the VCM space. If you made it through and you are still here, you get a freaking gold star, okay? Or a green star or whatever it takes. I mean, if you don't see the scarring from this group on the front, but if you made it through the past few years, any of you, kudos to you. So I'm happy we're just, that at least is temporary behind us. And I think, as always, it's a moment to shake out things that are maybe more fluff or more vapory, and really, who's here? Why are you here? Are you innovating in a bear? Can you figure out how to run a business? And frankly, that's been a big deal for us as Regen Network Development. It's frankly just getting tighter around ecological software products and not trying to boil the ocean, right? We need to run smart businesses. We need to figure out how to work together, and we need to build stuff that people want. Hard stop. If you're not doing that, then you're gonna fail right now. So just keep focused on who your product, the product is meant for, who your target market is, and be ruthless in developing and iterating to satisfy and delight them. That's what I'm looking forward to bringing into Regen and in the launch of some biodiversity products and other software tools that are going to delight project developers and spin up the future ecological credits that we need.
Thanks, everyone. I think that's all the time we have today.